So we think gas and LNG has a very important role to play in the global energy sector. It's going to be the fastest growing of the fossil fuels out to 2035, according to the BP Energy Outlook. There's going to be an abundant source of cheap gas, we think, coming out of the US Gulf Coast, something like 1,000 TCF of gas at less than $3 Henry Hub. So we think gas supply will be abundant. LNG will play a critical role in integrating markets. It's a bit like the glue between the markets, because LNG can take the gas to where the end consumption is required. So therefore it means that gas will play an important role and that prices across markets will harmonise. We also think gas is extremely important from the point of view of balancing renewables. So renewables will be the fastest growth of power generation in the future, but actually gas can play a really critical role in balancing out the intermittency of renewable sources of energy. So I think the first thing is it needs to be cheap, it needs to be competitive. So I think to date, coal in many cases has been viewed as cheaper on a pure dollars per MMBTU basis. But actually when you look at the full cycle costs and you look at the operating costs and the capital costs of new combined cycle gas turbines, for example, actually these costs are very competitive. But we also need to reflect the environmental properties of gas. So gas has 50% less carbon dioxide emissions versus a coal-fired power plant. So if you take the bigger picture view of we want not just abundant energy, but we want clean energy, and we need to make sure that we have reliable sources, not too much intermittency. Again, I think gas has a really critical role to play for the future. Yeah, so BP has some very large gas plays that it is focused on already, and we continue to develop those. For example, the likes of Oman, Kazan, also Egypt. We recently bought 10% of the Zohr field, and we continue to develop in the East and West Nile deltas. So we will continue to focus in those areas. Likewise, Trinidad, where we have a large position. Tangguh, we took a finance decision on the third train of LNG in Tangguh recently. And then, of course, there's some really exciting new opportunities in our upstream. We recently did a deal with Cosmos Energy where we're looking to explore offshore Senegal and Mauritania, potentially a 50 TCF gas opportunity and a great place to develop gas both for the domestic market and as LNG. And then lastly, in our trading portfolio, we're also looking at opportunities to procure gas from third parties. So most recently, we entered into an agreement around the Coral field offshore Mozambique with Eni and the partners, where we will actually offtake 100% of the LNG from that floating liquefaction facility once it's built. So lots of exciting developments. Yeah, so I think really great opportunities for gas. Some really large markets that are going to consume a lot of gas, including China and India, for example. Less in absolute terms gas growth in traditional markets like Japan, Korea and Taiwan, although they will always remain very important markets for us. And then new growth coming from what we call greenfield markets, so markets that traditionally haven't taken LNG thus far, but with LNG prices being depressed by the wave of LNG supplies coming on, we fully expect these markets like Pakistan, markets in South America, Vietnam and Philippines, for example, these will be markets where new infrastructure will be developed. So we will need regasification, jetties, pipelines, and of course power infrastructure to absorb gas. So actually the industry is focused on how do we invest in these markets, how do we bring combined solutions so that demand can be stimulated in those markets to absorb a lot of new gas that will hopefully come to market.